much. I kind of joke that this is close to the graveyard shift. So it's been a very long day of very fruitful and of wonderful discussions, and we hope we can add and share in relation to that. Now the title of this conference is Inclusive FinTech, right? And so really part of that and part of the title too is talk about wealth and wealth creation. And one of the exciting things that a lot of people have and feel about blockchain is the opportunity for everybody to participate in this and to buy and purchase tokens in this exciting new technology. Now, but this technology and buying of these tokens can only be considered an asset class if there's sufficient consumer or investor protection. Otherwise, maybe it's just gambling, right? So hence the rather provocative title, which is, is it a myth? Is valuation a myth? So maybe I can ask the audience here, so how many of you have actually bought tokens? Okay, good number, good number. So part of what we'll be discussing here is, and as you think about it, so how did you value the acquisition of those tokens when you made your decisions? So in the last 24 hours, Bitcoin is down by 11%. Ethereum is down, Ether is down by 14, and the crypto market just lost 24 billion US dollars. Okay, so as a general warning, purchasing tokens is hazardous to your financial health, right, and your heart as well, right? And so there's nothing that we say here constitutes legal advice or financial advice. Okay, so don't listen to us to make any investment choices. This is purely educational. We're lucky to have a very diverse group of panelists here. We have a traditional investor, YS, who spent a lot of time in VC and PE. We've got a blockchain academic who's got a very interesting paper and a framework in relation to valuing of blockchain, Cindy. Next to Cindy, we've got Ian, who's I describe as a young blockchain enthusiast. So he's a lawyer by training, but really has embraced and gone into blockchain. I think has a perspective that reflects a lot of people in the marketplace. And last but not least, we've got Andres, who's a I call a tech entrepreneur per coiner. So he's been in coins for a long time, but really comes from a real technology point of view. And myself, as you may have heard, I'm actually an IPO lawyer. So I come from the perspective of IPOs, and then in recent years with in startup world, really looking at online capital marketplaces. How can people fundraise online? So to start off the panel, I thought I'd start with a couple of quick questions, so they kind of hear the background or perspectives of some of these our panelists here. So kind of rapid round questions going down. So when did you start in purchasing tokens, and when and how and why? Yes.
Is it working? Okay, I started looking at blockchain about, actually fintech about 2 years ago, right? I mean, I've been spending my whole life investing in VC, PE type of companies, and blockchain really come to me about 2 years ago. Although I know much more about that before that, but really buying into coins, I've just only started in recent months, and I'm also an investor in some of these coins, and it's still very new, and I'm still wondering whether some of the investment that I made earlier on are sensible enough.
Cindy.
Yeah, I first heard about blockchain 3 years ago, and I never buy the tokens or the coins. I got paid for consulting work. So yeah.
Ian?
So I first heard about blockchain about 2 years ago, I think, but I only bought into cryptocurrency in 2017, more because when I realized that I wanted to learn about blockchain, it made sense to have some skin in the game, just to incentivize you to actually pay more attention to the due diligence that you do. Yeah.
I bought my first coins in 2013, and I did it because that did seem to be like a revolutionary technology.
And working backwards now, Andres, so primary or secondary markets that you primarily participate in?
Primary.
Okay.
It used to be primary, now secondary.
Yeah, actually, I invested in one project, like primary market, yes.
Both.
Fair enough. Now, do you actually use the token for its intended utility?
No.
No.
Never.
Absolutely.
So this is for those that are uninformed. You know, this is going towards the definition of utility tokens, right? Okay, so trader or an investor?
Investor.
Both.
More like investor, I guess.
Definitely investor.
Fair enough. Good. So now, as we all know, 2017 was the FOMO year. 2018 less so. So level of activity comparing 2017 or 18, increase or decrease?
Oh, very much increase from beginning of 2017. I see a lot, but in the start of 2018, a lot, and by just reviewing those white paper alone, it takes a lot of time.
Yeah, last year more like in industry side, and this year is academia.
Increase. I think 2017 was more investing. 2018 was more studying the project itself.
Almost the same, a little bit of decrease.
Okay, good. And you know, and some might say the best investors go when the market is low, right? And last of the quick questions. So, number of white papers read, you know, pre versus post 2018.
I think average maybe 2 to 3 a day.
Yeah, last year I only write those by papers like I serve as consultant, but this year I read. Yeah, because I'd like to write this paper and do this research project, so I read a lot of white papers, and it's not related with market sentiments, it's all related with my own schedule.
So roughly how many papers in the last?
Actually, I read at least I think maybe less than 1,000. Yeah.
Okay.
But quickly, just.
So I used to read about 20 white papers a week. I think this year is a lot less. I'm more selective with what I read.
1 or 2 a week.
Fair enough. Good. So now we dig down further into this valuation thing. So hopefully this gives you a color of where each of these participants come from. And I think they're great representation of the marketplace. So Cindy, I want to start with you. So I think we talked about white papers. So what do you think are the most important things to look at in a white paper, especially in light of your study?
Okay, thank you. Actually, I think it's very important to look at white paper because ICO is a fundraising process, and the white paper is the only instrument to provide information. And so talk about which perspective, I think first like the quality of information, and we specifically look at several perspectives. I think most important, we look at whether you provide the source code, and whether you provide information how you are going to spend the money out in the following years. And other than that, the governance mechanism is even more important because that is to reduce the information asymmetry or like reduce to make it the governance more effective. So for example, whether this project get escrow mechanism, and whether this money will put under escrow, and whether this project has a vesting schedule, and so such mechanism can help a lot. And other than that, the most another important perspective is team quality, and we look for we look all those background of team members and whether they have like expertise and also how influenced they are in the community. Yes, so that is generally 3 perspectives. We examined actually more than 20 indicators. Yes.
Great. So would love to hear the views of the rest of the audience. Maybe we'll start with a more traditional investor. So, you know, with an IPO, you look at the prospectus, you know, you do a DCF analysis, maybe you look at the assets, you look at PE ratios. In ICO, it's quite different. So care to comment a little bit about that?
Sure. I think in traditional companies where you invest into equities, you look at, you know, multiples, you look at net asset value, you look at using a DCF model to try to make sense of the investment. But in crypto assets, you really do not take that approach. It's very difficult because you can't create a DCF model because many of the companies are still very, very young and don't know whether they would do something for real. So in assessing white paper, we use a different approach, of course, you know. There are some of the people using MVT, some using other formulas and all that. But really to traditional people like ourselves, we still consider fundamentals, right? Whether a project is for real, whether do they have real technology or technology that are built by somebody that knows what they are doing and have been assessed. And of course the implementation part, you know, is very important. And normally before the ICO there's pre-sale, so we look at cornerstone investors, who they are. If they have Tim Draper, of course, you know, we will definitely try to get in, right? I mean, Tim has built a name. So valuation actually is not a myth to me, you know, right? For example, if you look at Circle raising 110 million for 3 billion valuation, you look at Basis, for example, right? You know, they raised 133 million. And then you have Coinbase and so on and so forth. Actually, my belief is that, you know, there are a lot of intelligent people in the Bitcoin, in the investment in cryptocurrencies, and in blockchain technology evaluation. So it is for real, the valuation. I mean, some of us look very deep into the implementation plan. Some of us look at companies that has already operationalized. Last month, I looked at 30 companies and invited 10 into our ecosystem, blockchain ecosystem. And out of that 10, at least 2 companies have been operationalized. They have made money. They serve enterprises. So I don't think, you know, valuation is a myth. It is really get down, work on the fundamentals, know your team before you invest. Thank you.
Thank you. Ian, care to comment on how perhaps you see, shall we say, that the millennials or younger people or the masses, shall we say, look towards this?
So let me start off by saying that I think there's definitely value in blockchain. A lot of blockchain projects actually have a lot of value. That being said, when it comes to actually valuing a project, I think it's very difficult in this space because the usual objective methods they use to value a blockchain project is very different from the traditional sense. Many of times when I speak to blockchain project leaders, I find that what they're trying to do is really great. It might be that they have the tech, but unfortunately they don't have the marketing skills. And if you guys have been in the space for a while, you know that oftentimes the price of a coin has very little to do with whether or not the project is legitimate, whether or not it actually has a use case. It's a lot to do with hype. So that being said, I think like what Yusing says is correct. There is ways of objectively evaluating blockchain projects, but unfortunately in the current market, those metrics don't seem to apply.
So I think you're saying it's more, you know, you're saying more sentiment based, right?
Yes.
And so, it's, you know, and again, in the traditional markets, you know, they call chartists, right? You look at the charts, and so that is a legitimate way in which to assess markets, if you like, albeit with this one a little bit more volatility. So I guess, but as was hinted at as well, so are they? I mean, so maybe I'll just throw a couple of criteria potentially, and I wonder to what extent you all may look into that. So. You talked about technical teams, and we'll get towards that a little bit more. Scalability, feasibility, community network. You know, how big is their Telegram group? How quickly do they respond? Right. Extent of distribution of trust. Right. The token economics. So these are, if you like, arguably new ways to analyze. How much do you all currently look at some of that?
Technology, definitely, making sure that what they want to do with blockchain is actually feasible. For me, this is one of the most important things. And the other thing that is, I think, often being overlooked, that I prefer projects that are actually has a business, has has revenue, and now they want to utilize blockchain in the proper way to further their already existing operations. These are projects that are doesn't seem to be too sexy, but actually the one that I think may worth the most.
And that's a great segue to the question about different segments or sectors, shall we say, that's arising. Sometimes, again, in the traditional investing world, we look towards comps. So how do you value, what are the comparables? What do they look like? You know, do they have competitive advantage vis-a-vis their brethren? And then here we also have the enterprise, right? So as you say, that more established companies now potentially using blockchain and like, so do you see, how much do you use sector analysis and how do you differentiate when you value if a public versus a private type enterprise? You say?
Yeah, I give an example. I mean, if you look at Binance, for example, you know, before Vertex decided to invest in them, they would have considered a long range of things that what they plan to do, right? You look at Binance, they were in Uganda, they were in Malta, so the reach is there, right? You look at security, of course, they're trying to build security into their system in many of their exchanges. If you look at reliability, they are now working with BARC, right? BARC is owned by, I mean, I don't know how to pronounce that properly, BAKKT, right? Which is owned by New York Stock Exchange. And Binance is trying to get into the investment side of things with regards to getting professional traders to work with them, right? So they need to, it depends on they need to, you know, broaden and deepen their reliability part of things. Now, these are not easy tasks that Binance, without its core business currently, would be able to embark on. But these are all value creation, right? So I see value creation as being one of the most important, whether you're public or private. Now, if you look at BN's Capital recent report, now BN pointed out a series of numbers of industries that blockchain technology has been used. Currently, blockchain is in about 28 sectors, right, industry sectors. And in that particular report, BN Capital pointed out that particularly for the public sector and the financial sector, okay, these are the two very prominent sector that uses blockchain a lot. I mean, for what, right? Precisely, I mean, if you look at valuation per se, if Basis is invested by Bain Capital, for example, there must be reason why they evaluated them, you know, and Basis has been very strong in not just building stable coin, but in its reach, its network, and working with public sector. So these are important considerations.
Thank you. So as Cindy, you heard from Cindy, you know, that the white paper is a critical piece of information for parties to make investment decisions, right? But you've also heard that it's an analysis of the teams. So both of you had access to look at the teams, and you looked at the source code, right? So, but if you start thinking of it and in that way, then really it's less about making an investment decision, because I think we agreed most of the people here are not really buying because to use the utility tokens, right? So you're making an investment decision based on outside the pieces of paper. So then really it's sounding more like traditional VC, right? So is that fair to say? Is that the direction? And especially as more investments are now veering towards equity, right? Is the market going more towards like a VC type model, do you think?
Can I take the mic first on this? Yeah, I think so. I think you read recent report that ICOs has gone quite a bit down. I spoke to a group just this week. They brought in like 400 companies into Singapore for ICOs, but they're seeing a lot less ICO these days. And in the conversation, it was hinted that, okay, now we need to change the approach. It should be STO, right? You have to give off some equities, of course, the token in order to attract investors?
Yeah, I think actually we have to define for utility token and security token. For utility token, I kind of feel that actually for each individual investor, or we call it participants, the utility of buying this token comes from two sides. The first one is use this token. The other side is investment. It all depends on the proportion. Maybe for Andrews, he focused more on using the token, but for Vesta, focus more on the investment. So I guess when we evaluate this utility token, and all those holders, they can be the user, they can be the investor. And we know that how to evaluate it, we have this long tail customer, and now we have this long tail investor. And this is related with, Ian just now mentions sentiment. And the sentiment matters a lot when you want to attract lots of attention from the audience, whenever this is long tail investor or long tail users. But when we talk about the valuation, we still have to consider, I believe in the fundamental analysis. And in other words, whenever this business can create value, and that is a fundamental, where the value comes from. So I firmly believe no matter what type of project we are looking into, and the first one, we need to focus on whether this project is a value created machine. Yes, and then we will consider whether this project is 2C or 2B, because 2C you need to draw those attentions, and then of course you have to care about the sentiment. And if 2B, of course, is generally slower, then you see this value appreciation in the token. So that's my limited observation from the industry side. Yes.
No, that's very fair. Ian, please.
So I think ICOs and STOs play a very different role in the blockchain community and in the industry. What I will say is that ICOs were really popular in 2017 and early 2018. Now everything is STOs. And let's be honest, I think a lot of the projects that I speak to, they're not doing an STO because they want to do an STO. In fact, if you look at why people did an ICO, it was to raise money. Why are people doing STOs? Because they see it as the next big thing. Everybody's in a rush to be the first blockchain project that produces the first regulated STO. If you really speak to them, are they interested in STOs? No. It's just a means to an end. So I think it's always important to keep that in mind when you're evaluating a company is doing a project, whether or not they're doing it because they see real value in an STO, or are they doing it just as a marketing stunt?
Interesting. So again, as a securities lawyer, it has an innate appeal because there's much more clarity around it. But to be honest, especially in the context of this summit here, it's only for sales to accredited investors. So we started with inclusion and wealth creation, but all of a sudden now it's only to accredited investors. So what's your take there? So suddenly it's not as inclusive anymore. And for the hardcore believers in terms of the democratizing, a lot of people don't quite like it.
Well, it is interesting because it seems that the market came a full circle, and it turns out that people who actually know how to value companies are important after all. And that many people learned it through the ICOs. But I do believe that it may actually, the STOs may actually take away the ability for us smaller people to actually invest in this project. And in my belief, it would be great to have some kind of compromise that would enable a securities light, that would democratize and enable the STOs, and would let us normal people to participate as well.
And great, and that's something we did talk about too. So when I set up ACMI, one of our first pivots was into what I call online capital marketplaces. So that's after the Jobs Act was passed in the US, which allowed for retail to participate in crowdfunding, equity crowdfunding. Some jurisdictions took on to that much more in terms of full regulations in places like Malaysia and Australia and New Zealand. Other places like Hong Kong and Singapore, less so. So perhaps They, and this is a journey, of course, right? So perhaps as STOs become more accepted as an instrument, how would you react to the possibility if there's a legislative interest in preparing some sort of equity crowdfunding platform which limits on investors? So investors, is just so that you know, this is high risk stuff, right? This is investing in early stage companies. You could get zero if there's no exit at all. And so often the rules require you to have a limit. Every retail person only can invest up to a certain amount. The company can only raise up to a certain amount. So it limits the parameters. What do you all say to a regime like that?
Before we talk about liquidity, I would like to point to the fact that, you know, some 10, 15 years ago when we look at internet space, right, then it was a hype, you know. We rush into the .com company because somebody else will give a higher valuation if you are slower. And then you don't get it. You can't get into Alibaba, for example. So, you know, but when the bubble burst, right, you know, we have 70% of our portfolio filled. Now, back to now, when we look at all these ICO project, STO project, I think whether you are institutional or private investor, we're still very concerned about liquidity, right? Now, and then we talk about technology, and we are very concerned of how the technology can help in, for example, in quantitative investment where you move volumes, right? And then we talk about whether a company is doing properly the market value management, which will help you to sustain your price. You know, so if those are not in, would you dare to invest in them, whether you are institutional or not?
Absolutely, I would very much welcome, even if it's a limited opportunity. In fact, I do believe that you do not need to raise $250 million to write a mobile application. So
You're the developer. A lot of it goes to Lambo days, right?
still, but I do believe that I should be able to run an ICO with the goal of raising $10,000 because that is what my community or project needs, and be successful and be able to do it and let anybody who wants participate.
Sorry, if I could just add one more thing. So the thing about accredited investors is, who are you trying to protect? Are you trying to protect the less wealthy? Because if you look at how you define accredited investors, usually they just refer to high net worth individuals. But these high net worth individuals don't necessarily have the sophistication to make these decisions. Why is the test based solely on wealth, right? To build a more inclusive community, I think we should look beyond that. In fact, I think the SEC recently made some proposals about having a accredited investor test, which I think would make more sense. I mean, you want to protect people, but you also want to give them an opportunity to invest in these companies at an early stage and benefit from the growth. So I think something like that would be a more fair approach.
Great. So I'm very conscious of the time. And so maybe if I can just close it off and echoing what Wyatt had said, and these are for those of us who have gray hairs. So I actually was in New York, and as a young associate, wanted to come back to Asia, but the senior partner said, Brian, you're kind of entrepreneurial. Will you help set up the Palo Alto office? The year was 2000.com. I went there, I pushed the last 4 IPOs, and then the market did this. So for some of us that have been around long enough, this has happened before. And in those days, the valuation was exactly the same discussions. They called it eyeballs at the time. How many eyeballs do you have, right? And that was how the valuations were made. But the market evolves, and real technologies evolve from that, and that's the important thing. Maybe if I can end with the note that starts with the very beginning of the conference, which talked about regulatory innovation. So to the extent, it's wonderful here in Hong Kong that our regulators are willing and able to try new things, and I think it'll be great as globally we find more ways to be inclusive, but at the same time promote innovation such that new technologies can really impact and positively the world around us. Can you please put your hands together to thank our panel here today?